that and bring this in. All right, welcome everybody. Hopefully you can hear me. I had this issue a bit earlier on. You should be able to hear me. It should be fine. Let me just get audio into my headphones though, just to make sure we've got those right as well. All right, okay. So I did a live a little bit earlier on. Welcome everybody. This is going to be the second live for today. There's a lot going on in the world right now, obviously. Unprecedented time. So as always, I'm sure that we'll have a lot of questions around Russia, the markets, that kind of stuff on this live. Ian has just put in here a comment that I think is just absolutely 100% spot on for where we are right now. And it just goes to show that we are living in a very, 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 very dangerous time right now. And wow, if I don't think anybody could have really envisioned this, even 2 weeks ago, let alone sort of, a few months ago. This is just, it's unprecedented stuff. It really, really is. But anyway, welcome guys. Food Dweller, Ivan, I know you're here. Cardano MM, welcome. GT Playboy, welcome. Let me just start off with this comment, actually, to be fair. Let me just get this up before I do that, though. Where am I going? There we go. Okay, let me just get this comment up by Ian, because I don't actually... You posted this earlier before the stream actually started, so I can't get it up. But Ian basically just said here, even in P, I really question Putin's state of mind, putting his nuclear staff on high alert. I wonder if he is at all surprised by the global backlash and sanctions that address him. Very, very good question. I mean, the thing is, for me, though, right? You're an aggressor. You're invading a sovereign country who you don't want to recognize, and you want to deprive them the choice, the ability to seek guarantees of security, right? After they gave up all of their nuclear weapons in 1994, of which you were one of the countries that they asked to help. You're now the aggressor. So you're an aggressor, and you know that NATO can't do anything because Ukraine is no longer in NATO. And because the Western world and NATO allies haven't stood by and just let you get on with it, what they have done, which is nowhere near as bad as what you're doing, putting boots on the ground, is they've levied economic sanctions. You've looked at these economic sanctions, you're a bit surprised, shocked that all of this is happening, you're now weighing up the cost of it, and you go from, okay, I'm now going to put my nuclear weapons on high alert. It is absolutely bonkers. It's cuckoo crazy. I just can't, it doesn't even compute. It's unfathomable to think that you go from that. I mean, try hacking the UK, try hacking America, cyber attack the hell out of people. That's what you would do. You wouldn't go from pretty much zero to nuclear weapons on high alert. It's bonkers. It's crazy. But this is the world that we're in. I'm interested to see what's going to happen with the markets tomorrow. So obviously off the back of that, America's reacted as well. I think there are some very, very interesting ways of viewing how this might escalate. And I think that the reasonable people in the room, I mean, I spoke about Trump on the live a little bit earlier on. Trump's a little hot-headed. I wonder how he would have dealt with it. Interestingly, Biden hasn't said a word today. And I wonder whether that's purely because he doesn't want to escalate things. I don't know. But it's going to be interesting to see what happens. I'll be tracking the markets tomorrow morning, see what happens on that front. I'm just looking at the charts for the markets. We know that on Friday, some of the markets did actually recover. I'm just having a look at what their closing positions were right now. I might share this screen with you as well so you can actually see it. But I think we're going to see volatile markets tomorrow for sure, because a nuclear threat, it adds a completely different level of threat to things. So where are my major markets right now? What's this thing doing? Bear me 1 second, guys. I'll just pull this up quickly. Where are we? Major indices. Okay, I mean, look, let me just share this with you actually because this is good. So some of the markets actually rebounded on Friday, which is a good thing. Let's have a look at this right here. So you should be able to see this right now. Let's get rid of that ad. So if you recall, if you were on the live with me on Thursday, you would recall that the only thing that was literally in the green was the VIX index. Now the VIX index is obviously that measure of what people feel, how volatile the markets are likely to be over the next 30 days. That's come down a little bit now as of Friday. All of the other markets are actually, they rebounded a little bit on Friday. I think in the UK, the FTSE was down like 3% or so. So FTSE 100, 3.9. So a little bit in the positive. So it'll be interesting to see how the markets all track tomorrow. Interestingly, the MOE, which is the Russian stock market, was down like 35%. They were up 20% on Friday. So it'll be interesting to see what happens tomorrow when the markets actually open to see where the sentiment is and what the confidence level is in the markets. I'll be very, very surprised if this move to a high alert from a nuclear point of view doesn't have a little bit of an impact tomorrow through the day. It's very, very possible that we see a dip either at the beginning of the day and it kind of like bounces around, maybe recovers towards the end of the day. What I think might happen is we might see a little bit of a dip in the morning. But again, I could be wrong. A lot of this stuff is kind of like guesswork. We don't really know what's going to happen. But it will be interesting indeed. Right, let's get to some questions. By the way, guys, many of you have been asking in the comment section for months and months and months now whether I have a Discord group. I now have a Discord group which is now live. The description to this video has the link for you to join. It is free. But basically, I'm going to be using that mainly for content streams, that kind of stuff. As I start to build it out, what we will be able to do is we'll be able to have conversations around, stock analysis, stock research, all that kind of stuff. There's a stock bot in there as well. I'll be using it for announcements and just to kind of like communicate a little bit more in a structured manner. For people who have taken coaching with me, there is also an added level of benefit for people who have taken coaching with me. Over the last maybe year or so, I've coached probably about 150 people or so. Because I want to make sure that I'm able to give value, I'm going to keep the coaching and accountability section of the Discord group to 10 people, 10 people only. And as positions become available, I might then open it up for other people to join. But the whole point there is often when I do coaching, we talk about your goals, your aspirations. We then have a look at your timeline, what you're doing, and then we map a plan. What people often struggle with is accountability. So the coaching and accountability will basically be an environment for us to have monthly catch-ups, quarterly reviews, and it gives you priority in terms of asking me questions on your journey as well, which basically get answered immediately. But to join the Discord group, it's completely free. So if you want to go do that, there's a link in the description. You can go and join there, and I will see you in there, essentially. Right, let's get to some of these questions. Naeem, how you doing? You know what? NLS, sorry, Naeem. I remember that now because I always remember people's like usernames more than anything else. But obviously, Naeem, you're on a LinkedIn and stuff like that as well. So it's nice to know and to be able to put that to it as well. Good man. Food dweller, Liverpool versus Chelsea. I don't know whether they're playing. Are they playing today? I hope Chelsea beat Liverpool, to be fair. But Liverpool are going great guns at the moment. And Lukaku's actually, he's struggling. He's really, really struggling. Andy, how you doing? Welcome. Yeah, FA has said that England will not be playing any won't be playing any games against Russian teams for the foreseeable future. I think that's a good thing as well. Are FIFA still saying them in the World Cup? Surely not. I mean, they'll probably come round and not allow them to play in the World Cup. Surely. Not that I follow Russian football or anything like that, but did they qualify? I don't know. I don't remember. I'll be surprised if they do. GT Playboy. Let's have a look at this one right here. Let me get it up on this side so I can actually put this on screen. There is a question here about... okay, cool. Let's have a look at this. I've pinned it in opposed to highlighting it. Bear me 1 second. What are we doing? Unpin. There we go. Show. Right, I took some of your advice from a previous video and I've increased my workplace pension contributions to 12%. They will put in 7% match. Okay, good. With a total contribution of 19% paid into it before tax. Mate, that's really, really good. If you read books like Rich Dad, Poor Dad, right? No, sorry, Richest Man in Babylon. The number that is quoted through that book is 10% of what you earn. You're almost doing double there. So with time and compounding, you'll thank your younger self for doing that right now, mate. It's a really, really good thing. And the fact that you've actually got them to get the max that they possibly can, you've got them to come up, it's free money. So it's good news all around, really. I will echo that as well, mate. Hopefully there will be. Apparently Zelensky and a contingent are meeting on the border of Belarus to kind of talk through possible options. But, you know, what's the potential outcome here? Because, Ukraine are never going to turn around and say, okay, look, we want to be run by Moscow, by the Kremlin. And they're certainly not going to give up, especially now after this invasion. They're never going to agree to a communist kind of like setup, a puppet regime, and they're most definitely not going to back down on their stance that they want to be protected by NATO. They want to be a NATO member state. That's not going to happen. So I don't see the point of the meeting, but hopefully they get some kind of ceasefire of some kind. I mean, 4 days into the invasion and he still hasn't taken any strategic kind of like facility at the moment. I mean, he's got Chernobyl, which is, I guess, close to Kiev, they're saying. But hopefully they're able to come up with something. But reading and listening to people, they're like, well, what exactly is going to have to be the concession for there to be, an agreement to call this off? I don't know. This is a good question. Why do events affect the stock market? Is it panic selling? No. Well, if you look at the stock market basically is based on businesses, right? The stock market is full of businesses that trade globally in a global economy. So when you have a war in a pretty prominent part of the world, like Europe, right? And I said this for the podcast for tomorrow. This is not a war that is 1,000 miles from us. This is actually in Europe, and it's not like a small guerrilla war. This is a major nuclear power stepping up, saying, "I'm involved. I am invading a sovereign country who hasn't been an aggressor to me, but I'm trying to protect the potential future risk that NATO will be on my borders." So when you think of it that way, all of these companies are interconnected, intertwined from global market point of view and technology and trade and all this kind of stuff, right? When there's a war, there's clearly going to be disruption to that marketplace. You talk about energy prices, for example; they're soaring through the roof right now, over $100 a barrel. So when you look at what companies actually produce these energy products, right, those companies might see an increase in profits because people need energy, but it's going to have a knock-on effect to other industries, other sectors where companies who have to buy this energy, for example, to utilize within their business to produce their products, to deliver their services, they're obviously having now increased costs. Are they able to pass that onto their customers? If they're not, that reduces their profitability, which in turn reduces their share price. So all of this stuff is interconnected. Whenever there is a war, the uncertainty of what is the outcome going to be is often what sees markets go really, really volatile. And that's understandable because we're so interconnected. It's not necessarily panic selling. There will be, for sure, some people will be like, you know what, so I'm getting out of this position right now. That's human nature. But generally speaking, the markets, in order for them to behave and work efficiently, they need to know that there is some stability in the fabric of the economic relationships of countries, companies, that whole landscape. And right now, war is a massive disruptor to that. The companies that will be making a lot of money right now, will be very, very profitable, will be the companies who are in arms. I don't personally invest in anything that deals with armaments. That's just me. That's not my thing. Um, but many people will say, actually, you know what? I wouldn't mind looking at, Lockheed Martin or something like that, or a company that produces or manufactures weapons. Because those companies right now, I mean, let's put it this way: the EU have already said they're going to be buying a shed load of weapons to be sending over to Ukraine. So all of a sudden, that's not small money. That's a huge amount of money. This will be in the billions of dollars. So armaments companies like that will do extremely well. War pays those kind of companies very, very well. It's just a nasty kind of, like, I guess, place to be, really. Would you advise anyone who has a 3-month emergency fund in place to start investing from that point, or wait until a 6-month pot is in place before starting? Really, really good questions, Sebastian. Um, I guess it depends on what you feel is comfortable for you and the right amount for you. Some people think it's 3 months is perfectly fine. I've certainly worked with clients when I was a financial advisor who felt more comfortable having a 12-month emergency fund, because they just felt like, actually, you know what? If anything were to happen, if I know that I've got enough money to cover all my bills for a year, I don't have to panic. It really depends on what your personal circumstances are and how comfortable you feel. One thing I will say is this, and this is in context to everything that's going on right now. You know, we already have pretty high inflation as it currently is, right? Inflation is going to be 8% in April. This is before all of this stuff kicked off. So when you're looking at your emergency fund, please bear in mind that fuel prices will go up even more because of this war. So that's your gas, your electric, that's putting fuel in the car. Food prices will go up as a result of this. Because remember, today, Russia can't fly in any of the European airspace, and the ban is going to be reciprocated. So they've already done that with the UK, right? So that trade stopped. So the price of things are going to go up. So with that in mind, bearing in mind that an emergency fund is your essentials that you have to pay, times up by 3, by 6, by 9, whatever you feel comfortable. When you're seeing an increase in cost, your essential cost, obviously there should be an adjustment in your emergency fund. So make sure you're making that calculation as well, and making sure that you do have sufficient available just in case. But once you've got that, if you're happy with 3 months, by all means start investing. It's all about how comfortable you feel as an investor going into the markets. It's not necessarily a mathematical equation. It is sometimes, but it's more about what makes you sleep better at night. Carly's on here. How you doing? Let's have a look at this. When the price of a dividend stock goes down and the dividend rate goes up, is that a totally linear relationship? And whether the price goes up or down, get the same value in dividend payment? I'm just trying to understand the question that you're asking there. So when the value of a dividend stock goes up, so sometimes what you'll find is that if you have, I need to remember which way this actually goes round now. So sometimes when you see a really high dividend payment, it's worthwhile paying attention to what happens to the share price. Because sometimes if you see a stock price like fall, the dividend payment will look really, really large. So, and those two things aren't always mutually beneficial. You obviously, with a dividend, it's all about a share of the profits that the company is generating. Obviously, profits moves a share price. So if a company is very, very profitable and paying dividends, the more people you have buying this share pushes up the share price, because it's all about supply versus demand, right? So the two things aren't always mutually beneficial. But sometimes when I look at a company that might have a really, really, really high dividend payments, I'm paying attention to what's happened to the share price, to the stock price within the last maybe 3 to 6 months. Have you seen a sharp fall in the share price? If you have, there may be other questions that you need to ask around, okay, so is the level of dividends that they're paying sustainable? Is it likely that they're going to reduce the dividend rate in the coming months because the share price has fallen? And those things you'll be able to know by looking at some of the financials within the business themselves. But in answer to your question there, yeah, sometimes you'll see it a really, really high dividend rate if the share price is falling quite a bit. And that for many people will be a red flag more than anything else. But it's worthwhile checking. It's not always, but it is worthwhile trying to satisfy your curiosity as to why the dividend rate is so high. Is it sustainable? Have they got enough on the balance sheet to sustain that payment for years to come? If they've got a really thin balance sheet and the dividend rate is really, really high, I'll be very, very surprised if they don't make a dividend rate adjustment, because they would have to, because the money has to come from somewhere, essentially. And unless they have a strong balance sheet, they're not going to be able to keep up that dividend payment. And the thing is that you also need to be mindful of is that if a company were to cut dividends, people who had invested in that company purely for dividend purposes are less likely to hold on to that company, because oftentimes they may have a target dividend return that they need, and that company is playing a role. So with a dividend rate cut, sometimes you'll find that actually people exit, the share price falls even further. So you kind of have to ask the right questions and be aware of what you're looking for, just to be aware. But a high dividend rate isn't always the best thing possible. If you haven't already, guys, please do me a favor and make sure that you smash that like button. We've got 21 likes at the moment. It would be really, really helpful if we get that up. Thank you very, very much. Where was I? Okay. Let's have a look at this one. Okay, I bought your course. I want to study more on investment advice. Which course do you recommend? Is that to qualify as a financial advisor, or what do you mean by investment advice? Because oftentimes, to qualify to be a financial advisor, you have to take a level 4 diploma. And there are different ways that you can do that. You can do that through the CII. You could do it through the LIBF if that's what you're searching for. I actually have a podcast episode which actually speaks about that. It is episode number. I've literally uploaded my episode for tomorrow yesterday. So if you go onto my podcast, which is Conversation of Money, the Conversation of Money podcast, it's on Spotify, all of the good outlets. It is episode number 4. So it was published 31st of January 2022, and that's how to become a financial advisor. And I was speaking with a guy called Sam Oakes. He runs a recruitment agency. He's recruited into financial services for a good number of years now, and he specializes in that sector specifically. He gives some really, really good nuggets, if that is what you're asking. I don't know if it is. I assume that it is, but if it isn't, let me know in the comments below and I'll circle back to you. But that will be a really good episode for you to listen to. That's episode number 4 for this year. So the episodes are tagged 2022 episode number. So 2022 episode 4 will be a really good listen for you. Which are better, index funds or ETFs? They're both pretty good, mate, to be honest. Cheaper in most instances, and ETFs will allow you to trade anytime a market is open, unlike an index fund. An index fund will essentially, Ralik, how you doing? Hey, listen, dude, do you want to jump on and talk about crypto? Because I know that you've had a bit of a bumpy week last week due to Putin throwing his toys out the pram. So if you do, mate, let me know. Just comment in the box, and I'll send you a link so you can join. It was great to have you, actually, to be fair. So yeah, ETFs will allow you to basically trade out of your position as long as a stock market, as long as a market is open, which gives you more flexibility. So for example, if it did turn out to be that Putin's absolutely nuts and he's like, that's it, I'm nuking everybody, and you thought, well, actually I want to get my money out, you don't have to wait until 5 p.m. in an index fund to close your position. You could close it at like 12 o'clock and maybe save yourself a little bit of money if it were to go that bad. But yeah, they kind of do the same thing, but one offers a bit more flexibility than the other. One's a little bit lower cost than the other as well. This is a really good question from Rob. Hi, Pete. Are the sanctions on Russia likely to result in hyperinflation there? Not sure how easy it is to get Russians to turn on their leaders, but this would be a possible trigger for disquiet. Mate, yes. I mean, the whole point of trying to get them out of the Swift system is to try and stifle the economy. I mean, to be fair though, like bearing in mind that there are millions of people in Russia, right? They are protesting. They are protesting, and they're all being arrested. And you've got to give them credit for that, because I think the citizens don't want this in any way, shape, or form. But I think that the exclusion from the Swift system potentially will mean that you will get hyperinflation in Russia, but it will still take a little bit of time to kind of take hold. Really, to be fair, I think if they're going to try and hit him where it really matters, they need to hit him in a place where the citizens will basically protest and say that they don't want this. But then again, he is the way he is. He doesn't listen. It's a communist society at the end of the day. They control the media. So I was reading a report earlier. There's a portion of the population out there that don't even know what's going on. They're like, what war? It's crazy. It really, really is. So hopefully we'll see that, and that's the intention of all of the sanctions. But will it be enough? I mean, look. Let's make no mistake. This has been planned for a very long time. I mean, Crimea happened in 2014. So I would say that was testing the water. He's been positioning troops for months now. So this isn't something that he just woke up and decided he was going to do overnight. This has been carefully thought through. They bolstered their reserves, $650 billion in reserves. So they knew that this was going to happen. I think he's probably been caught by surprise at the level of sanctions, and the fact that actually what's happened is what this has been the catalyst to is probably his worst nightmare. Like Germany announcing today they're going to spend 100 billion on defense. Like, he doesn't want that. Nobody, he does not want that. So it's going to be interesting to see what happens. I got you, Alec. Cheers for that. Trading 212 question. I got an email from Trading 212. So it looks like they have sorted their issues with FCA, perhaps just open an account, haven't put any funds, but looks no ISA allowed yet. Okay, that's interesting. Weirdly enough, was it last week or the week before? I got 2 free shares from people using my my link. Now, bearing in mind, I've not put my link on any videos for quite some time, and they've not been opening accounts. It came through out of the blue, so hopefully they have sorted their stuff out now. They should have an ISA though, for sure. I mean, they used to. I don't see why they wouldn't have one. Interesting. I'll keep an eye on that, Vin. Thanks for that. Benjamin, is now a good time to start investing with a fairly large lump sum, or should I wait for a slightly less unpredictable market, or maybe use dollar cost averaging strategy? Really good question, mate. Look, I wish I could tell you yes. I wish I could tell you no. The simple fact is, mate, I don't know. There are so many variables right now. I mean, inflation, interest rates, this tapering back of QE. I mean, is the Fed and is the Bank of England going to have to resume QE because of everything that's happening? I just don't know, mate. I think like the biggest thing really, mate, is if you've got a lump sum, just know it is 50-50. And I know it's not helpful to say this, but it's the truth. And I wish I could tell you that if you put money in now, mate, you'll be absolutely sweet. I mean, long term, you should be okay. But the problem with long term is it's hard for us to look that far ahead into the future. And therefore, when things happen in the short term that become painful, that often overrides the idea that we're doing this for 20, 25 years into the future, if that is actually your goal. One thing I would say is this: if you're investing where you're going to need the money in the short term, in the next 5 years, I would probably just stave off a little bit. There's a lot going on right now. Unless you're happy to know that the money could go in and it could dip and continue to dip, and you're okay with that. If you are, then by all means. But this is all about managing risk and being able to control the ape on your back, the chimp on your back, right? Because at the end of the day, when you see it go down 5%, 2%, 3%, God forbid, 10%, 20%, that part of our brain that is all about protection, keeping ourselves safe, that loss aversion starts to kick in. And that can often override any rational thought that we have. You could pound cost average in, but again, the same thing applies, mate. You've got to be okay with it falling in value. If you're pound cost averaging in, at least you're then picking up the monthly acquisitions at lower prices. And when you think about buy low, sell high, that's going to be of benefit in the long run. But numbers do show us that over the long term, lump sums perform better than if you were to pay in on a monthly basis. And I might actually just be able to demonstrate that to you actually using one of the calculators here. But you have to remember, your capital is at risk. You could get back less than you invested. And that is the bottom line at the end of the day. Let's actually just run a scenario really, really quickly around this, because I think this will be useful for people. Let me just make sure I got this at the right size so you can see this properly. All right. Okay. So let me just hide this. Apologies, guys. Right. So let's just assume, let's go to pounds here. And let's just say, I'm just going to use rough numbers here. Okay. Say you got 10K to put in. All right. And let's just say you were able to achieve, and I'm going to be really conservative here, 5% per year. And you're investing for, let's say, 20 years over that period of time, right? We're going to compound this yearly, no deposit. So it's just your lump sum going in, right? So I'm going to write down these numbers so we can actually reference back to this. So 10K. So 10, where am I going? 1 sec. There we go. Right. 10K. And we put in 20 years. 5% on average is what we're looking at here. No contributions. So you would have contributed, what was that? 16,532.98. But your value is 26,532 potentially over that period of time. Okay. Now let's have a look and see how it would work if, for example, you didn't put in the lump sum, but what you did was you added in monthly contributions, essentially. Okay. What's going on here? There we go. So you're going to put monthly contributions in, and let's just say you put in, I don't know, 500. Well, actually, this is where the numbers may not stack up. Let me just do this very quickly. So 10,000. 12. Actually, I want to do this the other way around, don't I? 20, 12, 240 divided by 240. Okay, you probably won't do this, but let's just say you put in 50 quid a month, right? Let's just see where that gets you over that same period of time. Calculate that. £20,000. All right. So you would have obviously contributed a little bit. Well, you would have contributed a little bit less there. Let's question the other numbers, actually. I might go back and just reevaluate that. See, slightly over £12,000. And this doesn't exactly line up, but you can see that the investment future value is significantly bigger. That's because the numbers all say if you have a lump sum of money going into the markets over the long term, it will perform better than if you actually put it on the monthly basis. Let me just go back and do that other example again, because I want to make sure we got those numbers right. Because the actual number, if you were doing £10,000 over 20 years and you did that on a monthly basis over 20 years, is actually, what was it? It was £41 or something like that. Divided by 240. Yeah, it's £41.66. So let me just get this right, actually, so that we've got a complete comparison for this. This will be 0. Yeah, so just under by about £2, but actually it's £16,000. So if you fed in that 10k over that 20-year period, you'd have £16,000. Well, 16,909 potentially. You would have contributed just under £10,000. So let me just go back over to this and just do this properly. £10,000 to begin with. I'm not going to do any contributions here. With those numbers wrong. Yeah, so your initial contribution would have been £10,000. That's your interest that you would have gained, giving you that total amount. So hopefully that makes sense, just in terms of some of the numbers around it. Again, it's all about managing risk at the end of the day. You've got to make the best decision for you, but just know that there's a lot going on in the world right now. And as a result of that, there will be a lot of volatility within the market. So the question is, if you do have a lump sum, are you okay with it yo-yoing around, and are you in for a tough? Are you okay with being on a roller coaster? Again, if you're investing for less than 5 years, you need to think about it very, very, very carefully. Really, really carefully. Naeem's asking. Okay, cool. So I did kind of cover this a little bit earlier on. So the Discord group is going to be basically just the way that I'm going to communicate with kind of those of you who follow me religiously on here. So it will be a case of we'll have voice channels within there as well. You can ask questions in there. If I do have, I'm thinking very, very carefully about doing some Discord only live sessions. So how that might work is these may become a little bit shorter. So I'm very, very conscious that on a Sunday evening, sometimes I'm on here for like an hour and a half, 2 hours sometimes. My partner's normally upstairs on a Sunday evening waiting for me, and to be honest, she gets little bit annoyed that I spend this much time in the evening. So these might end up being a little bit shorter for YouTube than in the Discord group, because you can actually have video calls within there. Actually have something for the Discord community specifically. There will be member tiers within there as well. So I already explained that for people who are taking coaching with me, because accountability is often one of the big key points of how do I keep on track on top of what we discussed and that kind of stuff. There is an accountability membership level there. You don't have to join. That is only for people who are taking coaching with me. That's limited to 10 people, because I want to make sure that I'm able to provide value for that small group of people. There is another tiered group in there as well. I've called it financial heroes because that's really the goal, really, is to help people become their own financial heroes, become financially savvy, know what they're doing with their finances and stuff. That is a tiered group, which is a monthly fee as well, but you don't have to join that. That's free. But what that will basically do is it will give you access to priority in terms of any questions that come in. You'll get answered first and foremost. There will be sort of monthly meetups, maybe. You'll get access to things like the magazine, the monthly publication. You'll get it access to that way before anybody else does. There'll be some other perks as well that will come into it. Then the general membership will just be, yes, I will answer questions still, but people in the paid tiers will have more access. And if you guys want anything or feel that you would benefit from something specifically, then by all means, feel free to suggest it within that group right there. That group will allow us to, do things like stock analysis. There's a stock bot in there where we can actually have a look at some of the fundamental accounting information for some of these, for some of the stocks. It will just be a form where we can communicate a little bit more and kind of build a community outside of YouTube, essentially. So that's what it's going to entail. But you guys will be important in terms of trying to actually build it out. So I'm open to your requests and whatever you guys feel you would benefit from the most. But it is completely free to join. The membership levels, when they're ready and open, will be optional for people to join. You don't have to. What are you doing for your birthday, Ralik? I know we were speaking earlier today, but what are you actually doing? Are you with family? What are you doing? You chilling? Let us know. Kev, let's answer this from Kev. Hi Pete, I'm 56. Have not been paying into a pension, but do have one property paid for, which I rent out. I'm self-employed. Where do I go from here? Okay, so right. There's a ton of stuff that's going in my head right now. Number one, when's your retirement date? How close is it? Um, if you've not paid into a pension, if you've been self-employed the entire time, you've not paid into a pension, hopefully you'll have state pension, which will come in, but it won't come in until probably 67, 68 for you. You've got a property that's paid off, which you rent out, so you're getting an income from that. Um, it's all about trying to forward plan your income requirement to the best of your knowledge right now. So if you had to fast forward to your retirement date, be that, I don't know, 60 or 65, what level of income do you think you would need? It will be worthwhile checking your state pension, whether you actually have contributed enough in terms of national insurance contributions for state pension, because that's going to be a big, big help later on. If you're married, Kev, between the two of you, you and yourself and your partner, state pension could potentially make 18,000, almost 19,000 pounds per year. That's quite a lot of money. But you kind of need to forward plan and try and understand, okay, what will my expenses be at my retirement day? Try to be as accurate as possible, because ultimately that's the key thing to work towards. So if it is that you need 2 grand a month, right? Okay, so when you bring in state pension, how much does that actually contribute to it? What's the gap? And then from that point onwards, once you know what the gap is going to be, it's then about trying to have a look at what you're doing right now in terms of the business, how well your business is doing, and how you might be able to then funnel some money into either a pension or some kind of other vehicle that could generate you an income moving forward. You'll have rental income, you might have state pension. I'd question, have you always been self-employed? If you haven't and you've worked for a business before, it's worthwhile checking to see whether you have any old pensions that you've completely forgotten about. Believe me, people think that they haven't got pension pots, but so much gets left on the table because people just don't realize it. I mean, I worked with a client when I was advising. She was 62-ish roughly, and she was like, "I'm knackered. I want to retire, but like I can't because I don't have any pensions." And her state pension was 65. So she's 3 years away from that. And in the conversation, I said to her, look, right, let's just have a look and see whether you have anything at all, like anything at all. Wherever you worked, give us all the information. She signed some letter of authorities. We wrote off. Information came back about 8 weeks later. She had 120 grand that she didn't even know about. So it is worthwhile going back over, if you have worked for companies in the past and you haven't been self-employed this entire time, going back just to check whether you have any or not. You can there is a government website that you can actually use to track your old pensions. If it's a defined benefit, you can move it, but no advisor is going to touch you because you're giving up guaranteed benefits. But if you do have a defined benefit, even better. That's great because you know you've got a guaranteed level of income that will be due to you at some point in the future, which is always going to be a good thing. But it's also making sure that you have to make sure you cross all the I's and dot all the T's. Don't leave any stone unturned, just to make sure that you're not leaving money on the table. That is what I would say is your starting point. But in terms of helping you plan, what level of income you're going to need and that gap, that shortfall, really, mate, you can do it on your own. You can, but the danger that you have there is that you'll get something wrong. And to be honest, the big question is, can you afford to get something wrong, particularly being so close to your retirement date? That's where a financial advisor comes in and can really add value, because it's not just about the shortfall. It's about, okay, you've got a shortfall. What do you actually need to do from a planning point of view to actually get there? Considering the fact that if you were to go into a pension specifically, you're going to be invested and you're going to have market volatility. You also need to go into the situation having test stressed the possible outcomes. So if the market does this, what's your finishing point? If the market does this, what's your finishing point? What can you expect? So that from a planning point of view, you're able to get a really clear idea of, right, if the markets crash, okay, I need to do this. I might be in a little bit of trouble. But actually, if the market does this, I'm going to be cool. If the market does this, I'm going to be absolutely sweet. And more importantly, having contingencies for those. Financial advisors are, I say this with the most amount of fondness. Financial advisors do a good job. I know a lot of really, really good ones, but they don't have the best reputation. And justly so. There are some sharks out there. I know a number of them. I've come across a number of them in my time, but don't let that put you off. To see one, to sit down with one, doesn't cost you a penny, mate. You might as well just sit down with a good one, give them the information, let them come back to you with a plan, and then once you see the plan, you can decide whether you want to use them or actually you'll take the plan and try and do it yourself. But I would strongly suggest you actually seek some advice because timeline for you is going to be relatively short, and I'm sure you're probably a bit concerned about whether you're going to have enough or not. And I think, if you're trying to navigate this, you want to seek really, really good professional help, like really, really good professional help. So that is where I would start personally, but hopefully that's helped a little bit. Sebastian, would you recommend any of the life strategy funds to someone to invest in long term? Yes, the life strategy funds are pretty cool. I mean, they do have equity and bond allocations, so they're diversified. But yeah, I mean, they're not going to be like immune from market fluctuations. They will still have market fluctuations within them, absolutely 100%. But they can be a very, very good starting place. Just make sure that obviously it's the right fit for your goals and what you want, what you want to achieve moving forward. That's interesting. So they've actually taken away the ISA option. That's really interesting. Huh. Actually, what? So I'm guessing they've kept the ISA option available to everyone who had it prior. What are they changing though? I don't get that. They had it available the first time round. Why would they make it unavailable? Unless they've had to reapply for authorization, which is quite possible. See, I'm on the Trading 212 website right now. Let me just show you this. I can see that. I mean, open ISA account. United Kingdom next. You got to join the list still. So they're still operating a list for this at the moment. Maybe that's why. I don't know. But yeah, it'll be strange unless they've gone through reauthorization. There shouldn't be any reason why they've actually held that back. But interesting though. I have an AJ Bell ISA, but I'm not happy with their fees and the time lag on buying and selling. Any tips, please? You're buying individual stocks, then I'd assume. Um, I mean, look, the buying and selling it will take time because at the end of the day, you're giving them an instruction, but they have an agent that actually executes the trade for them. So that will take time. Um, if it's taking longer than other providers, then maybe shop around providers a little bit. I mean, Wealthify, who sponsor this channel now, they don't obviously allow you to buy individual stocks via their service. They are very much like a manager, so it's all fund based. But if you're looking at individual stocks, your best bets will probably be the likes of eToro, Free Trade, maybe Stake would be ones. I don't know what they'll come out like when you compare fees though. So maybe that's a little bit of extra, homework for you guys to do. Right, parents of 65 received a lump sum of £15,000. Where's a good place to put it? Um, well, interest rates at the minute, mate, are really, really low. I would assume they don't want to be taking any risk with it. I mean, look, there are a number of things you can do. You can have a look at notice account, a 30-day, 60-day, 90-day notice account. You're not going to get a lot of interest, but you're going to get something from it. Alternatively, you could have a look at something like premium bonds, for example. It's cash free, tax free. Sorry, it's tax free, instant access. You can get entered into the draw, which is a monthly draw. You can win up to £1,000,000. You probably won't. They probably won't. But if they win 25 quid, 50 quid here and there, it's a pretty decent return. So notice accounts. even if you have a look at some fixed rate accounts now, you've got to lock it up for such a long time for a really minuscule rate of return. So, notice account to keep it accessible, you have to give 30 days, 60 days, 90-day notice in order to access it. You can access it instantly, but you need to give up interest. You have an interest penalty if you did that. But premium bonds might be a really good place, or just search for the uh, highest bearing instant access or savings account you can find online, really, as that is if they don't want to take any risk with the money in the stock market. But remember, the stock market is very, very choppy right now, so they need to make sure they don't need that money. This is an interesting one. Do you think that bond premium green backed by HM Treasury would be safer bet at the moment? Should we add gold, silver to our portfolios? If so, what? Thanks. I've not really had a look at the premium green bonds at all, but I would assume that they'll do really, really well, like the other premium bonds. Really, they'll be quite popular because they are backed by HM Treasury. So, in terms of gold, silver, yeah, I mean, look, they are a good diversifier. Whether you should add them to your portfolio or not is completely down to you. But as a diversifier, I mean, gold's up massively right now. The question is, how are you going to access the gold? You can use gold ETFs to access. You can easily buy, easily to sell. It's very, very fluid in order for you to be able to do that. But the question is it going to be backed by physical gold? That's the question, really, to be honest. Maybe I need to do a video on this, to be fair. So I might actually have a look at that for the next week or so. But yeah, I mean, gold, silver, commodities, anything like that are very, very good diversifiers right now. But yeah. Well, let's have a look at this one. This is an ISA question. I maxed out my 20K ISA account with Trading 212 for 21-22. For 22-23, do I have to open another ISA account with a different provider, or can I just add to my existing Trading 212 from April 6th? You can just add to your existing Trading 212. You don't have to open a new account, mate. So yeah, you can just continue to use the one that you're using right now. Get the hell out. Hold up. This is a troll, right? Where is this? What? Sorry, guys. 1 second. I need to check out whether this is actually real or not. I need to check out whether this is real. Oh, dude, I can't click on the account. Graham. This isn't the real Graham Stephan, right? There's no way that is the real Graham Stephan. Dude. Nah, dude. I'm not having it. I'm not having it at all. That's not the real Graham Stephan. And I can't click on the profile to even go and have a look and see if it is the right one or not. That's got to be a troll. If you are on here, Graham, I mean, like, literally, that's insane if it is. I know he's commented on one of my videos before, but that's nah. I'm not having that. No way. Anyway, look. So someone just asked as well, is that the real Graham Stephan? There's no way that is the real Graham Stephan. Come on, like, seriously? He's in Vegas. What's the time difference? Actually, it'll probably be afternoon for him, I would imagine, right? Anyway, if it is you, Graham, listen, big fan, love what you're doing and all that kind of stuff. Watching this channel is great. Thank you very much. Right. My missus just told me that food's ready, so I've got to bounce in a minute. I'm just going to scan the last few comments on here to see if there's a quick one that I can actually answer. Okay, let's have a look at this one. What's this one? Are you a fan of any of the financial media? Forbes, Bloomberg, Exeter got a Forbes subscription recently. I'm really enjoying it. I do follow financial media, so Bloomberg. I do follow quite a bit, actually. To be fair, people will talk about the fact that is the information really reliable, but actually it's full of professionals in there. They're very, very extremely qualified people. If I'm going to get my news from anywhere, I'd rather get it from there. The key is that when you are paying attention to things like financial news, because there's a lot of opinions, and sometimes the information can appear to, I guess, contradict itself sometimes. One person says this, the other person says that. Your job when you're taking in this kind of information, much like when you watch a video here on YouTube and you listen to what I say and you listen to my answers, it's for you to interpret and try to make sense of what that means for you and your understanding of the situation. It does take a little bit of time to kind of get used to the language, but once you're used to the language, you'll understand it. It's like anything, right? You don't get on a bike, then you're able to ride like immediately the first time. No, you crash a few times and you hurt yourself and you're a little uncertain about things, right? But then slowly and surely your confidence builds, and by the time that you're riding properly, you're confident with it, you can, ride with no hands. It's the same thing with financials, really, to be honest. But yeah, you have to try and understand the information. You need to be able to decipher it so you understand what it is that it means to you. The last thing anyone should be doing is watching YouTube and just going, yep, I'm going to do exactly that. Because I say this all the time, investing and money is a personal journey. What the likes of myself, Graham Stephan, even any of the big, like, especially, and this is the thing that drives me nuts a lot of the time, right? People will be like, oh, he's a millionaire, so I'm going to copy what he does. Okay, well, look, different tax situations, different financial requirements, different goals, which means different instruments, different ways of investing. You should not look at that and be like, I'm going to take that and import that verbatim into what I'm doing. You have to decipher, okay, what bit of that might be useful to me. So I do pay attention to financial news. I do. I read quite a lot all the time, pretty much almost every day. But again, I have to try and decipher what that basically means based on my own understanding. And I think that's really what everyone should be doing. But anyway, guys, I appreciate you. If you've not joined the Discord group, please go and join it. Let me just be very, very clear. In the Discord group, I am not going to be giving you stock picks. I'm not going to be doing any of that nonsense. I'm not going to be telling you that this stock is going to 10x and 100x and all this kind of jazz. That's not me. I would be lying to you if it was, and I'm not about that. What you will get in there is you will have the ability to contact me, to ask me questions when you have, like, I don't really know what I should be doing here. I'd really love to get a bit of an insight from someone who has worked in the financial services industry for 16 years, who is qualified as a financial advisor, as a mortgage advisor. I will tell you the truth based on what you tell me and what I ask of you in terms of information. I'm not about the hype. I'm not going to hype up and say, oh, yeah, this is going to be great. No, you're going to get the truth. And what that basically means is that sometimes you're going to hear what you don't want to hear, but that is the truth. That's what I can promise you in that Discord group: honesty, transparency, and stuff that is not hyperbolic, because there's way too much of that nonsense around at the moment. So I hope to see you in there. It is still relatively new. I only took charge of it literally this morning, but we'll be building out. If there's anything you guys do want to see, please let me know. As long as it's not stock tips, tell me how to trade this and tell me how to trade that. That's not what we're doing, okay? But guys, have an amazing Sunday evening. I will catch you later on. I'm going to have some food. I'm going to go chill out. But I appreciate every single one of you. Catch you in a bit.